This was pretty much the whole story that we've been talking about. At one point, I think all this drama started about 2 weeks ago. You know, that the market shut down, that wouldn't open, and then it sort of established these arbitrary limit downs on the exchange, and then it tried to reopen and kept hitting those limit downs. As you mentioned today, again, another 15% drop. And I think the fascinating story, not only to mention the LME's reputation, but trying to find a price. We've talked about those wide bid and ask offers, and there hasn't been a lot of price discovery, and that is sort of the key. And we're getting closer to that 30,000 level where a lot of traders are hoping for more of that price discovery to come through.
And you really have to wonder, once we do get price discovery, how much ripple effect there is through the commodities landscape. You know, there's been some great Bloomberg articles on the giant commodities houses and what this may mean ultimately for their books. And there never is just one cockroach under the rug, right? Once you lift that rug up and you find these inefficiencies in markets, it usually does ultimately impact assets across the books. So I think that's the key question we need to start asking is, okay, what next? Is there really nothing next? Where do we go from here?
Let's ask, well, another person we're pinching from Bloomberg Intelligence right now to give us a little bit more insight. Mike McGlone is with us, of course. He's heading the commodities and crypto strategy there. But talk to us about the commodities focus for you today, Mike, because when we see these lack of market efficiencies, when we look in particular at the LME, which has been trying to update itself, trying to play more to the hedge funds, for example, and then basically certainly not singing to their particular tune over the past couple of weeks, what does this nickel focus mean actually more broadly?
Well, your discussion, I think, was a great lead-in. The comments are spot on, and that is the first thing traders think is, oh, we don't have to deal with that anymore. That was the lesson of the plunge in the stock market in 2020. You look over at things like Bitcoin and things that never stop trading, never have disruptions. There's no central party. So traders, that's why traders are really more and more migrating towards crypto assets. They don't have these issues. And the specific thing with nickel is nickel's all-time high was from 2007, around $52,000 on the LME. Now it's at 31. Typically when you get these spikes, as Gina pointed out, there's major repercussions, but spikes in commodities oftentimes lead to enduring highs. Now that's what I think is happening in crude oil, but that's another story. But as far as nickel is concerned, I always look at it as the guy who's been on the phones with all the other customers. When you cancel trades, it's those 10 iterations of other trades that were related that all have to be expunged, and that can be very messy. So I think this is part of the end of, you know, centralized trading where there's a better way. And it's another indication, like I'll point out, that happened Saturday and Sunday is Bitcoin started trading down. That indicated the stock market was going to be down today. It's just part of where things are migrating.